What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 8th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I not only want to spend some time to talk about today's dip, where the market is broadly down around 6 to 7% in market capitalization, but outside of that as well, I want to spend some time to talk about the correlations with history, to see where we are within the market cycle, and outside of that as well, to really try to aim and dispel any fears that we're expecting much further downside. And I'll talk a little bit about why I'm very confident of this position. So let's just first go ahead and talk about the short-term price action. As we can see here, generally speaking, over the last 24 hours, Bitcoin is down around 6%, Ethereum down a little over 9%, and if we scan through the entire market here, we really don't have many plays here in the green. Most cryptocurrencies are down in single digit and some in double digit territory here. A lot of the DeFi plays that have really led the market over the past week starting to fade on some of those gains. It's very typical to see this. But what's really interesting is that even though we've got some plays here that are down anywhere from 5 to 10%, at the same time, if we take a look at the 7-day performance, a lot of those plays we just saw at the bottom of the screen, are still up in double-digit territory. And along with that as well, we've generally got a neutral trend for the rest of the market here, right? Anywhere between 1 to 2%, with a few exceptions down here in the red. All right, so broadly speaking, markets are back where they were from the beginning of 4th of July weekend. Right? Nothing too fearful. In fact, if we just take a look at Bitcoin here, right, it's generally around the same price range we had here in early July or here in late June, right? Similar price range we've revisited multiple times here. So we haven't gotten this to any kind of price range that would be too concerning. And I don't want to focus so much on short-term price action, no matter if we're doing great or doing worse than price action. It really doesn't matter, so long as we don't test any levels that signal any major concerns. What I'd rather spend some time to talk about here today that I think is just as urgent or important to understand or focus on is trying to understand where we are within the broader cycle. And one of the most interesting things that I want to talk about here today is a very interesting similarity to what we saw back here from June of 2019 to December of 2019. The first major correction since we'd set in the actual peak capitulation point, the bottom of the bear market here in December of 2018. And I think this is going to really set the tone here for why we're having larger declines. Now, I know you guys who watch the channel religiously know that I love to rant and rave about credit and leverage trading and how it disorients markets. And that's generally, for those who don't know, the reason, clear reason in this case, it's not really debatable why the sell-offs are more dramatic in the market. Whether you think this is a bear market or just a mere mid-cycle correction, it doesn't matter. It's the reason we're seeing much more dramatic, volatile swings in the market, even though as markets usually grow, volatility usually declines. Crypto has not seen that yet. And the reason why is because of excessive short squeezes from people trying to short the market and having to cover for their positions. And then also for major declines in the market where longs have to cover for their positions or they get liquidated, which causes a domino effect on the sell side. Okay? So these exaggerated swings up, exaggerated swings down. What I wanted to focus on here that I thought was really kind of eerily similar in this case, that one thing that stood out to me was the price action, the price decline here we saw from June of 2019 to December of 2019, right? Nearly half a year in this case where Bitcoin was stagnant before starting to actually pick up another uptrend. And here, from May of 2021 to where we are here now in July. Now, albeit the time frame is very different here, and I'm not saying that now that we might have potentially set in a low for this mid-cycle correction, or at least what I'm confident of in this case is a mid-cycle correction, that we're just going to leapfrog up. I'm not saying that. But what I want to focus is the percentage decline here, right? Albeit, yes, a lot of people would want to focus on the full-scale correction considering March. COVID itself was a bit of an anomaly in the market. And if we're just generally considering here the decline before what was really probably going to be the uptrend, and just to kind of further signify this point here, you can see that once we got back up here, we made this range support and continued the further breakout here, the bull market. We can see here that there's very similar percentage decline within the market. And I think this is really important to keep an eye on here, that overall, this kind of mid-cycle correction from the absolute bottom here, first major wave here of the overall cycle, and then the correction, we're seeing similar price decline. And I think that this is a general fair range here, when, albeit from the exaggerated bottom to where we are around nearly 50% down. I think this is at a point where I would get optimistic. I wouldn't be fearful. Sure, you could maybe go revisit to that 28K level for Bitcoin and revisit down to a slightly above $1 trillion market cap for crypto assets. Sure, you could get that. But this chart here for total crypto market cap showcases a very similar price decline here that started to speak towards an area that, generally speaking, whether you bought right here or if you bought down here or bought up here, doesn't really matter. You are buying at a solid price point before the significant continuation of the rally that led us towards being $1 trillion and eventually $2.5 trillion asset class at the peak. Right? Turn off logarithmic. Just to kind of put that in perspective, right? After that correction, it really didn't matter if you picked it up there, there, or there. In this case, markets continue to move much, much higher and set a new historic all-time highs for valuation, both for Bitcoin and for altcoins as a whole. And again, I just want to reemphasize here, right, that there really isn't, historically speaking, any cycle where after even a full bear market, even a full 80% correction, we ever came down to touch kind of the previous high range from the last few cycles, right? And generally speaking, right, this would be a historic first if we were to get Bitcoin going down to its previous all-time highs, and for altcoins and general cryptocurrency valuations to come down here to 700, albeit 750, $760 billion, right? And then rebounding upwards. We've never come back down to touch previous highs back here, in this case from January 2018. It'd be a first of its kind if we really did that. Not to mention, you can look at a variety of data science models. You can look at the sentiment indicators. We have the stock to flow model here. One of the largest deviations here, right? One of the largest deviations we've ever seen here from the stock to flow. Meaning, in this case, on the downside, meaning that we have gotten to a very, very discounted point range. The only area we haven't gotten this low is probably down here in 2013, or that's probably still 2012, and then down here as well in July of 2017. The third cheapest point here on the stock to flow, the third biggest deviation that we've seen to the downside. Is this really a period of time to get fearful? Or perhaps looking at the crypto fear and greed index, right? The fearful side is still holding strong, just like we had back here in March of 2020, just like we had here the low point here in August, and then outside of that as well back here in December 2018 when the market actually set at a bottom. Well, where was price during these periods of time? I can tell you guys they were at discount opportunities. Here in March of 2020, here in December of 2018, they were not periods of time where investors should get fearful. And I can tell you guys, I don't know of any bull market that starts, if you want to really talk about the real bull market phase when we break past the previous all-time highs. I don't know of any cycle that lasted only 4 months. You want to maybe include altcoins in the equation, or maybe the fact that it held out a little bit longer before really selling off. Okay, 5 months. I'm not going to say to you guys that the market's going to recover overnight, but I'm also not going to lie to you in saying that it really doesn't make sense for there to be a bear market at this point. If we simply understand the dynamics that the rallies and the corrections are over-exaggerated, the only reason after COVID we really saw this domino effect, right, on this daily candle here, this 38.98% decline, it would usually never happen if it weren't for the excess and unhealthy amount of credit in this market. And people taking on credit that they don't have the collateral to protect themselves with. The additional collateral outside of leverage positions that they're taking. It's the only reason we see these exaggerations in price declines. And overall, we're doing exactly what is pretty much tended to be expected in a given correction, a mid-cycle correction, to come back to a midpoint here, right? We had the breakout here, past 10,000, came up here to 40K, came down to 30,000, built a base, rallied higher, more than doubled to 65,000 from those lows. We come back down to that midpoint, and then we continue the cycle higher. It's pretty simple, guys. This has happened many, many times, not only in crypto, but in many other cryptocurrencies, or excuse me, any other markets out there. And I think it's much more akin to the exaggerated rally here in 2013 that had a correction coming downward, a mid-cycle correction that was significant, solidified, took multiple months in this case from that peak right here, April, all the way here to October to really recover and start climbing higher. I think we're seeing something similar. We can't just compare it here to the 2017 cycle. It's just not healthy. So, anyways, guys, a little bit of a rant and rave here, but I thought it would provide some interesting perspective in the sense of showcasing how in this cycle things are very different with the degree of the volume and kind of a activity that's going on in spot markets, which is much more important to develop. We want more liquidity and volume on spot markets to get real price discovery rather than all the speculation that's going on in derivatives markets, as well as people who are borrowing on leveraging credit. So that's why we're getting more unhealthier upswings and more unhealthy corrections in the market. So that's my rant for today, guys. If you like this kind of macro analysis, you can always check out the Dash report down below in the description. It's a great way to support the channel and just kind of get this kind of macro analysis. If you listen to me ramble for this long, you not only deserve a gold medal, but the Dash report probably is for you if you enjoy my written format as much as my verbal format. Anyways, guys, thank you all so much for giving me some time out of your day. I hope this video was helpful for you guys. If you'd like to consider dropping a like, sharing it with a family or friend member. If you haven't already, consider subscribing to the channel. That being said, everyone, thank you all so much for watching today's video, and I'll see you all in the next video. Take care, everyone.